Hello, ladies and gentlemen. Warm welcome to today's webinar. We're looking today at making spreadsheet kung fu an act of the past, specifically looking at the power of automated reconciliations. So my name is Susie West, and I'm the founder and CEO at sharedserviceslink.com. We are a business community for leaders in finance shared services. And with me today is Anthony Rafter, Senior Business Analyst from Trintech. So let's have a look at what the next session holds for us. We'll touch on the intention of the session, and then I'll be handing over to Anthony, who will be going into detail about how you can sort out your reconciliations and automate them as much as possible. And then we'll be taking your questions towards the end of the session. So in terms of your questions, this is very much a two-way dialogue. If I can ask you just to bring to the front of your mind the questions that compelled you, if you will, to sign up for this session today, and make sure that you do get answers to those questions. So make sure you send the question through to me nice and early. Very, very straightforward. You just pop it in the red box that I've highlighted there, and submit it to me. I'll put the questions to Anthony in the last 10 minutes of the session. And the sooner you get me the question, the sooner you send that over to me, the more likely it is to be asked. So with that in mind, let's have a look at the intention of this session. Most of us will be very aware that spreadsheet accounting, which many of us do, many high-volume shared services organizations that operate within multinational organizations, we still find ourselves doing spreadsheet accounting. And we all know that this is high risk and highly inefficient. And yet, for some reason, we continue to do it. And we also do know that sophisticated companies continue to manage reconciliations and other key financial processes within this inappropriate environment, when really it can stop and change very elegantly and very, very quickly indeed. So with this knowledge, and also the knowledge that that this spreadsheet management is a huge drain on resource, not just money, but also people and time. And it is also, quite frankly, an underutilization of a shared services organization's capability. Shared services organizations should be doing other things. They shouldn't be managing their processes in this, effectively, this archaic manner. And we also know intrinsically that industry experts know that this is not at all best practice. So with all of this in mind, what we're going to be talking about today is a solution to all of this, the fix, and that the fix is within reach. So with this in mind, I'd now like to hand over to Anthony Rafter. Over to you, Anthony.
Thank you very much, Susie, and welcome everybody to today's webinar. As Susie said in the opening slide, today we are going to be discussing taking spreadsheets out of your financial processes and certainly reducing the dependency on those spreadsheets wherever possible. As you can see, it's a fairly busy agenda, so let's dive in. So what we're looking at here in the key business drivers, just to set the scene, and I'm sure I'm not telling you anything you don't already know, but the business of finance, particularly in the current economic climate, I have to say, is to manage cost without negatively affecting the service provided. And as we go through today's webinar, we will address how these business drivers are achieved using best practice. So to continue, let's have a look at the current gaps in finance technology. So once upon a time, there was a young man named Bill who thought it would be a great idea to introduce spreadsheets and office automation productivity tools to the world of finance. And I'm glad he did, and I'm sure many of you on the phone are happy he did too. And these offline productivity tools have become the stalwarts of a lot of what we do in finance and accounting today. And for many years now, I'd have to say, we've been reliant on these tools. But as good as they've been, I think it's fair to say they do cause problems within the financial close processes. And most companies and customers of TrintTech find it very challenging to manage the specific processes and workflows efficiently around that. Many encounter problems when rolling up multiple spreadsheets, which is very time consuming and certainly error prone. And if you factor into that the multiple business entities, the pressured reporting timelines, the effort and complexity of the collaborative processes increases. In short, I would say the business problem of managing and auditing a process that is primarily paper-driven is costly, inefficient, time-consuming. And these are part of the clear business drivers on the previous slide and part of the clear reasons for ditching spreadsheets in favor of a dedicated online solution. So, given the time available to us today, I will focus on a particular specific area of spreadsheet pain, namely reconciliations. So, what are the main challenges with spreadsheets in reconciliation processes? Well, the way it works today is that companies often have many people engaged in the process of preparing the reconciliations. And there tends to be lots of different styles ranging from what I would call hardcore complex reconciliations, possibly intercompany, order to cash, supplier statements, through consolidation tie-outs and grouped accounts, to more simplified substantiation of a GL balance such as investments, provisions and reserves. So we're looking very much at that myriad of reconciliations, the mixture of those hardcore analytical reviews and then reconciliation self-assessment. And the spreadsheet's often the tool of choice used by many organizations when it comes to this preparation and review process. And those spreadsheets in turn tend to be printed out, placed into massive 5-inch binders, which are then distributed to reviewers to collect signatures. I'm sure we're all familiar with little stickies often sitting in and out of the 5-inch binder, trying to draw the reviewer's attention to certain exception items that need their specific attention. And of course, the challenge is that these binders are touched multiple times by multiple individuals, multiple roles, stored in multiple locations, and this creates many of the process and compliance challenges that auditors just love to report. So, what else could possibly go wrong, you might ask? So let's have a look at the tracking of those reconciliations, because this does not get any easier. As this picture shows, the offline reconciliation process is extremely cumbersome and challenging. There is often a lack of internal controls, and it certainly doesn't always run smoothly. Staff have to work every month on repetitive tasks, which eats into the time needed to deal with the real exceptions and issues. We also hear concerns about missing signatures, disappearing files, often improper formats. People do it the way they've been either taught to do it or the way that they know how to do it. Process owners also tend to complain about lack of transparency. They get insufficient analysis. Very often the manual methods today don't generate the type of KPIs and metrics that they are really looking for around the process. And there's no standardization. So it's very difficult for the shared services organizations to get a harmonized, uniform approach to how submissions and preparation are done all around the globe. And it's because of this that auditors effectively spend more time scrutinizing the content to ensure appropriate substantiation of the account balances. And of course, it's not just for auditors, it's also a reason why on your own account balance verification programs you'll spend the time, because you want to ensure that the numbers and the quality of those numbers, the integrity of those numbers that roll to your management reporting, to your statutory reporting, to your treasury reporting, are accurate, and that you can get it right first time, and that a lot of time isn't spent remediating having got to the position of trying to generate management and statutory reports. So the evidence, in my opinion anyway, is insurmountable that manual reconciliation processes should be replaced. On that note, I'm going to hand back over to Susie, and we'll get your opinion in the first of today's polling questions.
Thank you very much indeed, Anthony. So on your screen now, if you can tick the button or the box, most appropriate to your own situation. Which statement best describes your reconciliation process today? Too many spreadsheets, very manual. No clear visibility into the status of the reconciliations. Insufficient control over the process, lacking in time and tools to allow for other accounting activity. If you could all vote, please. We've only had 25% of you voting. So if you could make sure that being on this webinar, you could participate in the polls. We try and make sure that the majority of you respond. It just makes the feedback from the poll questions much more meaningful. So still waiting for a number of you to respond, please. If you can make sure that you do respond. Again, which statement best describes your reconciliation process today? Closing the poll in 3, 2, 1. Okay, let's have a look at those figures. Coming in with just over 50% of you responding there. So coming up on your screen now, you can see that fairly even actually in 3 kind of winners, if you will. Too many spreadsheets, very manual. Insufficient control over the process and lacking in time and tools to allow for other accounting activity. Interesting responses there. And back to you, please, Anthony.
Thank you for that, Susie. And I'm sure we'll have an opportunity to comment on some of those areas later on. So, so everybody, I think, probably agrees that manual spreadsheets is clearly not best practice. But what does best practice look like? So what this slide looks at is what a best practice should really contain and what the benefits are that it can deliver. The slide shows the collaborative environment that's achievable when you take the preparer, or to take the paper, I should say, out of the equation. And all those involved, whether they be performers, reviewers, controllers, executives or auditors, have clear visibility into the status of the reconciliations. And I think it's fair to say that the workflow ensures both process efficiency and compliance. But it's that distinctive collaborative nature that is one of the inherent factors of a best practice solution. The full engagement of all the parties that would need to be involved in the process. And the seamless way and the smooth and fluid way in which the user experience flows from ERP straight through to the verification of the numbers before reporting. So it also should address the ownership and account assignment. They should be controlled and managed by a best practice methodology. I think aging of open items, managing exceptions, their visibility onto a dashboard, key elements. I think it's also important that that a best practice offering here would use every opportunity to mitigate risk and improve the quality of the reconciliation. So with supporting documentation being maintained electronically, a best practice tool should typically come with its own repository, or at least be able to provide direct links to an existing repository, so that there is certainly supporting evidence when audit or historical recs need to be brought back into play, and there's clear evidence of that, and there's clear links to the supporting documentation. But equally, if there is already a dedicated archive or a dedicated document management tool, that links are provided to the supporting evidence in that repository. And the key point of the best practice is that, as our title today suggests, Spreadsheet Kung Fu becomes no longer an issue, and 5-inch binders, if you like, are consigned to history. So how does technology replace manual spreadsheets? So let's have a look at technology for a second. So clearly this collaborative approach is enabled by implementing technology, right? And that provides an online tool with, the easy accessible functions. On this screen, it's pretty clear that a preparer, it has clear evidence of what period they're in, what close period they're in. They can have broadcast messages. There are clear links out to policy documentation and network shares. There is, at a glance, they can see the accounts that they are particularly responsible for as individuals. They can see what the status of those accounts are, whether they're started, not started, maybe they're pending modification, having been rejected by a reviewer. Perhaps they've got a significant portion already complete, but they can see instantly at a glance what's happening in the progress of the accounts that they're responsible for. On the right-hand side dashboard widget, they can see the progress of the tasks. And these tasks, they may overlap with certain account reconciliations, or they may be activities that are completely independent of reconciliations. So if we think closed activities or closed task checklist, all the various things that need to be done, preparations of bad debt reserve, contingencies, disclosures, if we think of all the different tasks that need to be performed, these tasks are actually enabling the workflow around those process steps. In the bottom left-hand corner here, we're looking at open reconciling items, aged. And of course, this is a key feature of any best practice tool and technology, is that not only does it age the exception items for which action plans and substantiation need to be still delivered, but it also provides aging for open items. For those of you with ERP systems, maybe utilizing SAP or Oracle, it leverages open item management and the aging of those open items. So the dashboard view is really what a preparer would see when they log in. And I think it's probably fair to say that it's very intuitive. It contains all those hyperlinks to the policy documentation, procedures, and instruction. And you can clearly see what period you're in. Clearly see what's outstanding, widgets display open items, and news and information and alerts are thrown to the dashboard. So with a click, the reconciler is taken into the rec to complete the reconciliation. So let's have a look at the reconciliation template in terms of it replacing the spreadsheet. So on the screen right now, we can see exactly how technology replaces the spreadsheet. Okay? The very first, maybe obvious and apparent thing, but maybe not so obvious, is it's a single screen. And in one single screen, the user interface replaces the spreadsheet because everything that the user needs is right here. So where we can see this, the first indication of the boxed, red boxed area, you've got your GL balances and the balance explained. Now the GL balance has been loaded directly in from the ERP system, as has the balance explained. So insofar as the ledger systems within the ERP explain the balance, those items are sucked in and they appear in the left-hand side under the intangibles, because this is an intangible assets account. So in the steps to complete, just to the left of the grid, you see 5, 6 boxes there. These are the steps that reconcilers are being guided through in relation to completion of any self-assessment or analytical review. And we try to leverage as much as possible information already in the ERP so as to streamline reconciliations and bulk process or automatically process reconciliations, so that if these items actually fully agreed and everything was intact, this could be an eligible automatic reconciliation, and then it wouldn't need any particular specialist attention by the preparer. And this is one of the ways in which we improve operational efficiency and save a lot of time in the process. But equally, we provide a quality control around the preparation through the steps to complete on the left-hand side by showing clearly, if you drill into each box, if you drill into intangibles, you will see all the elements, all the items that make up the balance explained, that substantiate, in this case, the majority of my GL balance, bar on a net unexplained difference of €2,000 or £2,000 or $2,000. So if there are exception items to be explained, users can click into the reconciling items and quickly create a reconciling item. If it's already known and it's existing somewhere, it can be interfaced or imported to the template. Files can be uploaded and attached as supporting evidence. They can be at the account level, or they can be at a specific item balance level. And if any variance analysis is required from this rec in terms of period on period or period on quarter, period and a half year, then a tab will exist there for this particular style of account to produce that variance analysis. And it's a simple release for review after that point. So, as I say, this is one example of a template. It's an intangible asset account, but there are numerous templates that come out of the technology as standard templates, and then there's the flexibility to configure templates as befits the different logical styles of account. The particular templates, are populated automatically, as I said, through the scheduled imports from the source systems and through the various connectors that we have to the ERP systems. So, in this case, there is an unexplained difference, so the reconciler would now go into step number 2 and begin to substantiate that difference and detail any action plan to resolve the issue. So on the screen right now is an illustration of a type of exception form. These exception forms are configured and designed by the client, by the customer. It allows for the capture of key information about the exceptions. Items of a material nature are easy to track. You can see that the fields can be optional, mandatory, free format, or drop-down options. Risk rating can be controlled both on a static risk basis or on a dynamic risk basis. So the tool is very, very clever. Technology is very clever in this regard. It doesn't just accept necessarily that you might impose a low, medium, high risk, static risk rating to the accounts at the outset. It actually provides for the creating of rules and business criteria that allow you to determine certain results to the account line or to the exception line that allow you to risk rate that accordingly in a dynamic sense. So this type of approach allows finance to run a single report to view the aggregated financial exposure across the balance sheet. So let's have a look at browsing out to attach supporting documentation. So it's quite easy, it's very intuitive. Not only can the preparer explain the differences, but they can also navigate around the desktop and the network shares to obtain and upload supporting evidence. This supporting evidence and these documents are then stored online in the tool technology's repository with easy access to that, but it equally and very importantly locks down those files that are supporting evidence, gives them a unique reference number out on the server in the repository so that they are protected forevermore in relation to being supporting evidence for that particular period for that exception in that rec. The reason and the logic obviously behind that is because very often documents are used as masters, and preparers or people submitting self-assessments go back to the master in the next period or maybe before the next period rec, and they modify or update the master. So the key thing is to lock down what is exactly substantiating the balance in the period. So it is this repository of information and its easy accessibility really that makes, not only the life for preparers, reviewers and approvers in-house, but it makes the life of third parties that need to access information easier as well. The auditors, for example. But of course you can give auditors a particular type of accessibility in that regard when the audit is taking place. So if we move on beyond to the attachments themselves, it's easy enough to browse out, and you can link to any piece of supporting information, any type of file. It doesn't matter whether it's Excel, whether it's Word, JPEGs, GIFs, images, PowerPoint. The document extension is irrelevant as far as the attachment as for supporting evidence goes. What is also important is that once you've uploaded the documentation to the online tool, that it is locked down on the server. That was the key piece that I was speaking to there a moment ago. So this is to ensure the integrity of the rec, of course, for audit purposes. And the collaborative approach, of course, also adheres to the segregation of duties principle. So in the segregation of duties principle, we are looking to make sure that we are compliant with Sarbanes-Oxley and pursuant to Section 404, that we're not delivering up opportunities here for collusion. Ensuring that, of course, the preparer and reviewer are, which they can be preparers and reviewers, but just not on the same account. And it also reduces the risk, of course, of the fraudulent practices we sometimes read about in the press. So, looking back at the reconciliation template, this slide now shows that the preparer has explained the balance, has recorded any action plan to address the difference, and uploaded the supporting documentation relevant. So this reconciliation is now ready to send to the reviewers and the approvers. So as we move through and release, there is an online certification screen which allows for the preparer to basically state that they are compliant with corporate policy and that they have followed all of the relevant steps that is asked of them in the completion and attestation of their self-assessment. The online certification statement is not a given. It's a flexible, customizable statement. You can enshrine your own company's approved policy statement within that screen. The preparer can also add additional comments for the reviewer's attention. The reviewer is notified via email. Email notifications run throughout the technology in terms of best practice. Obviously, preparers need to be notified if balances have changed and they need to substantiate to a new balance. And they can return to the application to complete any urgent reviews. So once the preparer has signed off, we can now move to the dashboard and see the end results in terms of the progress. So we can see that where the reconciliations have moved from a not started position through to completion. And of course, this completion can be further enhanced in terms of automating the progress, because those individual accounts that need attention are delineated in terms of those that firstly need or are eligible to bulk and automated processing. So the automation tool actually delivers far more than single or individual accounts that need attention. And as you know, there are many reconciliations that don't really have frequent balance movement. There are various accounts that have to be attested to that have a zero balance. There are accounts that constitute low risk. There are accounts that have, you know, they're static accounts. There's not much movement in the period. And these are all examples, really, of assessments that are eligible for automatic reconciliation. So as we look at the next screen, we can see some of the rule types that come with technology, come with this particular tool out of the box as standard auto bulk reconciliation rules. This slide shows the obvious accounts where you would elect to use such bulk and automated rules. So you can see in here that we have ledger to subledger, we have zero balance accounts, we have accounts with no activity, and you know, you choose a suitable rule where eligible accounts can actually bulk or automatically process. And behind these business rules is a key criteria that is determined by the business. And where bulk reconciliations are used, what you can see on this screen is that all of the accounts that meet the rule are effectively pre-selected based on that criteria. And in one click, the preparer saves hours of effort in photocopying for a large chunk of the accounts that they are responsible for. So, technology for a collaborative approach. So just to recap, what you've been shown here today so far is a brief overview of how technology streamlines process and improves efficiency in a typically spreadsheet-dominated environment, albeit specifically for reconciliations in the time available to us today. The dashboard approach is being used by in excess of 100,000 users within the TrintTech finance community. It's not a new concept. However, Spreadsheet Kung Fu is still performed by many weary, well-qualified finance professionals every day. So, Susie, on that note, I'm going to pass back to you for another of our polling questions today.
Thank you very much indeed, Anthony. So, coming up on your screen now, this is multiple choice, ladies and gentlemen, so if a couple resonate with you, please feel free to select. Which of these statements would be most beneficial for you if you removed spreadsheets from your reconciliation process today? You'd be able to release time to manage exceptions, and that would be beneficial. To better manage workflow and segregation of duty, and that would be very beneficial to you. To improve management information and reporting, and that would be key to you. Or to improve your audit results, and that would be beneficial to you. So which ones in that list resonates with you and would mean a lot to you if you could achieve that by using a solution like this? So we're still waiting for quite a few of you to respond to the poll today. So please make sure that you respond. I'll be closing the poll in 3, 2, 1. Let's have a look at the responses there. So again, just over 50% of you responded. Coming up here, you can see. So a clear winner there, 67%. Improved management information and reporting. Clear winner there. Back to you, please, Anthony.
Yes, thank you for that, Susie. That is a very interesting poll result there, and maybe we'll have some questions around that when we get to Q&A. As I said on the last slide, we have many users and over 600 organizations who have mostly removed spreadsheets or certainly reduced a lot of dependency on spreadsheets from the reconciliation process using dedicated built-for-purpose software. And the main driver, of course, we know is to cut costs and drive efficiency. So that said, what I'd like to do is say something like this. Don't just take my word for it. Let's have a look at what some of the industry analysts have proven that are the savings you can actually get by moving from manual spreadsheet-based processes to online process, and they are quite substantial. It's quite interesting that what we can see is that in this benchmark that the Hackett Group are showing, that organizations who have moved away from manual spreadsheets have a much higher instance of automatically reconciled accounts, using, as we saw, bulk reconciliation, for example. And it provides real-time savings. It's very, very clear. The more we can automate, the more efficient we can be, the more we will clearly improve in terms of the cost aspect of the process. And it can be 3 times less costly per balance sheet reconciliation. That's quite significant. And if you recall, I mentioned our client that is currently reconciling using bulk and automate reconciliations, and they are achieving well in excess of 40–50% of balance sheet accounts being automatically reconciled today. So our evidence, and clearly from Hackett's research, it supports that this is a worthwhile initiative. It is very well worthwhile to replace the manual processes and try and obtain the savings and the efficiencies that we know are available. So let's have a look at some client stories, just to give you a flavor of some of our 600 clients. So on the screen at the moment is a case study around Celanese. Celanese is a Fortune 500 client. They specialize in the production and distribution of chemical materials. I think it's fair to say that initially Celanese were a TrintTech client in the US, using the solution primarily to ensure they were compliant with Sarbanes-Oxley, mostly in terms of the prescriptive tasks that Sarbanes-Oxley ensure you must be compliant with. But today, Celanese have extended the use of the solution to include automating GL reconciliations and to provide an online collaborative solution for their global enterprise. It's, if I remember correctly, it's currently managed out of the shared service center in Hungary. And I think it's fair to say that the Celanese SSC, under the auspices of Mike Felicio, became well regarded as a best practice example of how shared service centers should operate. So the next sort of client success story and case study I'd like to introduce you to, well, I guess this client needs no introduction, to be honest. Yahoo wanted an enterprise level scalable solution that could grow with their enterprise. So where you've got mergers, acquisitions and carve-outs, they wanted to be easily able to put these under control. And to be rolled out, if you like, over a period of time to their Americas, EMEA and Asia Pac. It was successful because they had like clear strategic intentions. They needed a tool to create a global repository, profiling the detail of GL account reconciliations and resolution status. All right? It's very simple, that one. In supporting this tool, of course, they needed to be collaborative. They wanted accessibility from any location, operating in multiple time zones, round the clock, 24/7, 356 or 365 even. Furthermore, they needed a dashboard to monitor real-time progress and allow them to manage the quality of that reconciliation process. They had an internal value proposition to obtain organizational buy-in. It's centered around almost forcefully creating a controlled, systemized environment that forces reconciliation quality standards. And then the second element of that proposition was active monitoring for outsourced processes. The third piece then being the global visibility and reporting on the status of the recs and the compliance approval process and tracking the open items. And I think it's fair to say they realized several sort of high-level benefits. Caroline Curtis, at Yahoo is a customer advocate for TrintTech. She regularly takes reference calls to help other businesses understand how they achieved what they did. So, on that note, I think, Susie, I will pass to you for what I think is the final polling question today before we go into summary and Q&A mode.
Lovely, thank you very much indeed, Anthony. So, as Anthony mentioned, the final poll for the day. If you replaced spreadsheets with a collaborative solution, what would be the most beneficial benefit to your business? Please select all that apply. Peer interactions for continuous process improvement, transparency and visibility, quality reconciliations, process efficiency. It would enable you to focus on the value add. So multiple selections there. Please tick the ones that strike a chord with you. And we're still waiting for a number of you to respond. Final poll for the day, ladies and gentlemen. So last time I'll be asking you to participate in one of our polls. It's always very useful for us to be gathering this information. So if you haven't already responded, please do so. I will be closing the poll in 3, 2, 1. Let's have a look at the results. Coming up on your screen now, again, a very clear winner with 56% coming in with process efficiency. So any comments on that, please do share with us, Anthony, and back to you.
Okay, thank you very much, Susie. Yes, I think there's an interesting trend developing across the different polling questions today, and I'm sure when we get into Q&A, we'll hear more about that. So, so thank you, Susie, for that. So now you've had a flavour, if you like, of TrintTech's best practice approach to reconciliation, albeit a high-level overview and maybe just a fraction of what can be achieved through automation. And you've seen the 2 examples of the type of clients that are using the solution today and what they do. Exactly what Susie mentioned at the outset, making spreadsheet kung fu a thing of the past. So I'm thinking, let's throw the 5-inch binders out the window and free up your skilled resources to work on valuable business activities. So Susie, I think we can pretty well open at this point now for questions from the floor.
Thank you very much indeed. We do have a number of questions coming through. So if you haven't already put a question my way, we have about 5 minutes for Q&A, and I do urge you to capitalise on this opportunity to put your questions to Anthony, who is very clearly a leading expert within this field. So question number 1 coming through. We've got actually a couple of questions on the actual project implementation. So as far as the project implementation of a solution like this, Anthony, what investment of time would a shared services organisation typically be looking at to get this off the ground and up and running?
Very good question. It breaks down into a number of different layers. First one is typically you're talking about an elapsed time of about 90 to 120 days. And I stress elapsed time. Most of that time is actually around decision making, recognizing the fact that you know, customers as we have today, as they went through that process, they have day jobs to do. They've got close periods to be processed, and they've got filing and reporting and various other things to be addressed. So it tends to be broadly around the 90 to 120 day elapsed time. There are specific types of resources, which is another layer of that question. The type of resources typically are SMEs. Okay, so the biggest proportion of time during an implementation is by SMEs. The smallest portion of time is by IT. So it's very much a system owned by finance, run by finance, managed by finance. But we do have that 5% input, if you like, in terms of 100% of the project time and resource. We have that 5% input by IT right at the start, and then IT come back into it again as we move through UAT and are about to consider loading the environment to a production state.
Okay, good, thank you. So I've got a question here specifically relating to the ERP. So an ERP explains automatically what the balances are. How does an ERP know how to explain this, and how is it actually mapped?
Okay, well, the ERP itself doesn't know how to explain the balance. What the ERP is a system of record. So as a system of record, it's excellent at keeping track of all the transactions that we're processing, right from the lowest levels of debits and credits right the way up to summary and to actual GL balance. What automation tools like this are really good at doing is extracting out directly from the source the GL balance and any accounts that might be underpinned by open items, for example. It can extract out the open items, it can bring everything that's needed in and quickly show at a glance if there's an unexplained difference. And this is where attention and focus needs to be applied, where there's an unexplained difference. If everything is intact and is in agreement with rules processing and so forth, then it automatically flows through. So the idea is to improve the user experience and to help them be more efficient through that process. So very much a case of direct connection to the ERP, taking what's needed out of the ERP, but with the SME, with the subject matter expert providing that underpinning of any differential that needs explanation or an action plan in terms of the resolution of that. Or for that matter, the tool may actually, the individual may identify it straight away, and therefore the automation tool will provide the ability to do a journal. The journal will be posted straight back to the ERP system. The balance will be changed. The balances can be loaded daily as appropriate through the closed window, and that way we have a closed loop on the entire process in terms of account balance verification.
Are previous periods and the balance from previous periods available for preparers when they're completing the reconciliation so they can assess reasonability?
Yes, they are indeed. The balances from previous periods are held because, and it's a good question from the floor, that as we were looking at one of our template types today for intangible assets, I had a tab called Variance Flux Analysis. So what the templates do is they allow you to have the balance from the prior period within the template, visible in the template, and it also lends itself then to allow prior period balances on a month-by-month basis to have a different level of verification to actually underpinning the balance as it is in the period. So I may explain the balance clearly as it is in the period, but if there's been a significant movement on the balance from period to period, I may also have a rule in place that says I've got to also explain that. So the system tracks the prior period balance and allows us to perform flux analysis. Another interesting thing here is that on the template there is a push button that takes you to the prior period reconciliation, pops it right up as you're doing the current period reconciliation. So if it's been helpful and an aid to this period's rec, then that link and that button for the prior period is there as well.
Thank you. There's a participant on this webinar, a lady called Elizabeth, I think, and you're submitting a couple of questions. Could you resubmit them, but with context, please? So just make it clear what your questions are connected to, and then I can put them to Anthony as well. You were talking, Anthony, about the fact that it's important to have the obviously finance people involved, and also IT. In your experience, who is a key sponsor for this, a key kind of stakeholder for this, that can make or break this actually happening? Who is the individual that must be involved if this is going to be something that a shared service organisation is going to invest in?
Well, that's a very good question, and to some extent it would depend on the nature of the organization. And what I mean by that is some organizations, all of the services provided by the IT function potentially are right down to buying software for finance. In that situation, it would be very key that the CTO, if an organization has a CTO, is actually sponsoring this project. On the other hand, if it is very much the business selects what the business wants, then it should be sponsored by the CFO.
By the CFO. Okay, good. And also just Any final questions, please do submit them in. We are just about to close down on all questions and answers, so this really is your last chance. I've got a question here regarding ROI. It's obviously front of mind for a lot of organisations to make sure that they do get a return within a certain period of time. You've obviously shown a couple of examples with Vodafone and Celanese. If a shared services organisation were to invest in this, what would be the kind of a conservative ROI that they would be striving for?
The conservative ROI would be around 20–25% of current cost in the process today.
Thank you very much indeed, Anthony. So if you've got any questions for Anthony, we will be sharing his contact details in the follow-up email. In the time being, please do make sure that you join us for our 3 upcoming webinars that are taking place in March. You can see them on our screen right now. And also please make sure that you join us for at least one of our events coming up in Chicago and also in London. You can see the details on the screen now. So thank you very much to Anthony, and thank you, ladies and gentlemen, for your time and attention, and we look forward